Good evening, everybody. Again, my name is Doc Severson with TheoTrade. Tonight we're going to be going over the trap trading system, or how to generate faster, more accurate profits from your trading. So before I get started tonight, here is our standard risk disclosure, which essentially says that if you don't treat this like a business, this will be the most expensive hobby that you can imagine undertaking. We don't want you to do that. I will not be recommending anything tonight for buying nor selling. Now, what I will ask is that you may be tempted to take the replay and distribute this to other people, or take the information from tonight's presentation and perhaps even teach it to other people. That's what I would hope. But before you do that, please, before sharing this information, please go ahead and contact us first, support@TheoTrade.com. and we can work something out with you. Okay, thanks. Now, about TheoTrade, we are a trading education firm based out of Scottsdale, Arizona, specializing in education for options, futures, and stocks. I myself am coming from the beautiful metropolis of Westerville, Ohio. TheoTrade was started by veteran professional traders who are first and foremost experienced trading educators. We are not a registered advisory service nor a brokerage firm. So although we provide the best trading education in the business, your results and ultimate responsibility are your own, like anything else in trading. Individual trading results will vary. Trading does have risk, which we try to mitigate. Trading involves real money. TheoTrade is here to help you mitigate the risk in the market while learning a skill that can last you for life. Okay? Now, did you guys know that men with male pattern baldness, it's been shown through studies, are definitely women find more attractive. So at least that's my initial bid here. I am a husband, father of 3, student pilot, working on my license, reformed engineer, and I'm that guy that quit my 6-figure telecom job to trade full-time about 12 years ago. For TheoTrade, I teach options, technical analysis, and neuro-linguistic programming. So I've been with TheoTrade now. It's been my honor to be here for the last year and a half. Okay, yeah, reformed engineer. So engineers have a tendency to get a little bit too hung up on things. They're looking for the perfect trade, and what I've had to do is reform myself not to look for the perfect entry that feels just perfect. Actually, we're going to talk a lot more about that tonight in tonight's presentation. I like to think of myself as an innovator. Really, there's not a whole lot that's new in trading and the education of trading. There's not a whole lot of new concepts, but there's always a new way to connect with people and make sure that they understand something that perhaps they had skipped by before. So I've been trading now for about 21 years and 11 years of thinkorswim platform experience, which is still the best in the business. And a couple years ago, I wrote a book called Hacking the Holy Grail, which is available on Amazon. It looks like that right there. And it's about kind of the journey about how everybody's looking for the Holy Grail and how you can hack that journey for the Holy Grail. So tonight, what's in this for me? You should be asking that question. What is tonight's presentation about? What's in this for me? What's in this for me? Did you know that the conscious brain loses focus every 10 seconds and is wondering why you're listening to tonight's presentation? Every 10 seconds, you're losing focus. So I'm going to keep reminding you what we're going to be talking about tonight, the objectives that I want to convey to you guys tonight, how and why price moves the way it does on our charts, why entries that feel good usually don't work out for us. This is something I'm always talking about in the room, is that the best trades that you take are the ones that feel the worst. What is that all about? Why you will resist making those smart money entries. Why you're absolutely going to resist doing the right thing here. And I'm going to be going into what is this trap thing? What is this trap trade all about? What does it mean to be trapped in a trade? Why these emotions create the velocity of the trap, why human emotions create this edge that you can grab from taking the trap trade. The 3 rules to spotting the trap trade entries. So I'm going to share those with you tonight. Okay, so take good notes. I will also give you several examples on how you can use the trap trade setup. So I'll show you actual trades that I've taken recently here with the trap trade setup. I see them all the time. I see them every day. So there's no shortage of uses for this trade, unlike something that maybe you learned about a few years ago and no longer works in this market. This is something that I see all the time, will always be there. It has to be there. And then we'll go into next steps and how to incorporate this signal into your trading. Now, there's one favor I need to ask for you guys. We need to work as a team tonight to get you through this, right? So I appreciate you guys being here and spending time with me today. Hopefully, it's my sincere hope that you get a lot out of tonight's presentation. For us to kind of get to that point, though, I have to ask you guys a favor. If you could please hold your questions. I know that you're going to see things that are on the screen and you're going to have immediate questions like, wait a minute, what did you mean by that? Do me a favor, write down those questions. Just write little notes to yourself, because we will have time at the end of tonight's presentation. That's why I want you to stick around for a little bit longer here tonight. There will be time at the end of the presentation where we'll take your questions, right? But if I do what I want to do, and I love to answer questions, I love to help people, but if I do what comes naturally to me, we'll never get done tonight, because I'll sit there and stop for every question. So I've kind of trained myself to sort of ignore the chat window. If you do have any issues or questions for the support staff, we have Jeff and Tony and Don and JP out there answering questions for you guys. So if you have a question for the support staff, go ahead and write that in, and hopefully they'll be able to get to you or answer your question as you get through to that. But as far as the topic material, please hold off, write notes to yourself, and circle back with me at the end of the presentation. Okay? All right, away we go. Part one. So what I'm going to talk about is the smart money, and I want to be sensitive to people. People are very sensitive these days, and so I don't want to say the dumb money. Let's call it the not so smart money. So why does price move the way that it does in all financial markets? And it doesn't matter which financial market that you name, they all move the same way. They all move the same way, right? So when we see something like this, we see this price moving up and down, and I've been watching this price move like this intraday, all day, every day for the past 21 years, especially for the past 12 years, right? So over that period, I've been logged a lot of time staring at charts all day, every day. So let me throw some numbers at you here. The screen time really adds up. Okay, and I'm not doing this I'm not trying to have a contest here to see who has the most screen time or anything, but I do want to make a point to you guys here. So if I take the last 12 years that I've been doing this full time, so I've been doing this now for coming up on 12 years now. And if you figure 252 trading days, if you didn't know that, now you do. There's 252 trading days per year. And guess what? I never take a day off. Even if I'm on vacation, I am always plugged in. It gets in your blood. You can't do it, right? Now, if I conservatively figure maybe between the pre-market action and the price action moving at night, and plus the 6.5 hours per day of the cash market, let's just conservatively figure 5 hours a day watching price on my screens, okay? That is over 15,000 hours of watching candlesticks move up and down on charts. You think I'd have something better to do with my time, right? Now, I do respect the probabilities of random walk. The random walk people say that there's no pattern to price. It can do whatever it wants to. It moves up and down. All price movement is completely and utterly random. Okay, I respect what they're saying, but I don't necessarily agree with that. If you spend 15,000 hours watching price move up and down, you will start to see the same movie over and over and over again, right? So there's this book that was written a few years ago by Malcolm Gladwell called Outliers. And it's a fascinating book because it talks about human performance, about how some people perform better depending on when in the year that they were born, believe it or not. And then he also goes into this whole sense of after he studied elite performers, it takes at least 10,000 hours of dedicated practice in a pursuit to achieve mastery in a topic, which is now kind of, you hear this quoted around the place everywhere, like, "Oh, have you done your 10,000 hours yet?" And it's kind of, nobody really questions it now, because he just kind of goes on over and over and over again about how people, once they hit that 10,000 hour threshold, start to become masters in what they do. So I'm of the opinion, I'm not sitting here trying to tell you guys that I'm a master in anything. Quite the opposite. I will never truly master the market, because it's never the same. It's always changing. It's always changing its stripes. It's very different this year, I think you would agree, than how it was back in 2012 or 2011 or 2009. The market is always different. Every market is different from year to year. So it's like playing golf to me. Even the best never achieve perfection. You'll never be the best at it, right? You can only hope to maximize what you do in your own, your own potential. But you do get to the point, again, like what I said here, was you've seen this movie before. You know what the ending is going to be. So I've seen a thing or two over the years. And this tends to help. It's like if you're a parent. Those of you that are parents that have had children out there, you know what I'm talking about. You're able to intuitively anticipate the needs of your kids or your spouse even. You begin to do the same thing with markets and how they move. So when we first start to trade, we see the same commonly available information that everybody else does, which is why most retail investors enter and exit at the same time. If you've ever joked with somebody saying, "Hey, just wait until I enter the position, then you can take the opposite side because it's guaranteed to work out." You've all joked about something like that before. There's a reason why this happens. It's because you're using commonly available information as well as your emotions to make decisions. Over the years, you start to see the moves within the moves, though. These generate more edge to those that can separate their feelings from their actions. Now, those of you may have heard of this cycle before, but this is how you kind of put this into play in the markets here. There's 4 commonly accepted modes to a market rally. First of all, what you're going to find is disgust. And this is from a market that was generally trending higher, and all of a sudden it just drops for no apparent reason. Those of you that know this remember back to August of 2015 and that sense of disgust that most people that were holding long felt as they get completely run through. That quickly leads to the second phase, which is disbelief, especially right from the most bearish point on this chart where it looked like a lower high was being printed and markets were about to rocket back down to 2009 levels. All of a sudden you get the market rallying back up again. This is called disbelief. Nobody can believe it. What on earth is going on? Everybody feels betrayed because just 2 days ago, perhaps, all the news was completely bearish. You couldn't find one positive article everywhere. And all of a sudden the market's rallying. Doesn't make sense. It must be manipulation. It must be the Fed. Everybody complains about it. That ultimately gives way to acceptance, though. Stage 3 is acceptance, where everybody kind of sits around in a circle and nods knowingly that, you know what, I guess this market really is going higher. And that eventually leads to euphoria, where everybody is convinced that nothing's going to happen to this market. And then the cycle just repeats over and over and over again. You can actually see the next phase of disgust over here. Now, something else that I've seen with the markets is not only those first phases, but also, and this is for those of you that have spent any time with me whatsoever, I will constantly say that I don't care about markets being overbought and oversold. I think those are concepts that are dated to maybe 10 years ago. Are you telling me right now that overbought really means anything in today's market? It does not. However, what does mean something in today's market is this concept that range contraction will lead to range expansion. And then that range expansion will lead to the next range contraction as well. And then that range expansion will lead to the next range contraction. So we just go back and forth between these phases of range contraction, which is in the boxes, and then the trends, which is range expansion, finally leading to the next range contraction down on the lower right. Again and again and again, over and over and over again. So forget about your concepts of overbought and oversold. They do not work in today's market. Something else that I would see over and over and over again, and this sort of forms how I look at markets right now. And again, you'll notice that I'm just looking at the price right now. I'm just looking at the price here. I'm not looking at any magic studies. I don't have any black box. I don't have any, cool sounding indicators that are on here. Nothing, just looking at price. But I would see trends that are flying along, and all of a sudden the bottom would drop out. They would suddenly reverse. And what I had to find out was the pattern behind that reversal. Understand the signature behind that reversal. How would you anticipate the next reversal from a downtrend that now starts moving again to the upside? How can we crack this code of understanding how trends suddenly reverse, whether it's uptrends reversing to downtrends or downtrends reversing to uptrends? So when you put all those together, this starts to form kind of the things that I would see again and again and again. And really all this market behavior is due to emotion. All market behavior is due to emotion. So I don't care if the majority of trading volume is due to high frequency trading. So there's a lot of people out there spreading a lot of fear, uncertainty, and doubt about high frequency trading. I actually think it's a friend to the retail trader. It's providing liquidity. It's making sure that there's another side to the trade if you want to get in or get out of that stock or option. It's not an enemy to us. So I really don't care about high frequency trading, or that the majority of the buy-sell programs out there are due to algorithms. That's been the case for years. Doesn't bother me at all. Someone is programming these systems, and it's certainly not artificial intelligence yet. So we're not going to go down that rat hole just yet. What we are seeing is amplification of human emotions, which is fear and greed, displayed on the price charts in full view of everyone else. There's nothing hidden about what's going on out there. There's no mysteries out there. Price is exactly what it is. The market's trying to tell you what's going on with the emotions of the market. It's whether or not we stop to actually listen to what's going on that is really the clue. And it's kind of the key towards what I tell students all the time is that you're not really trading versus the market. You're trading versus yourself. It's your own biases that are preventing you from seeing what's actually happening out there. So it's all there to see if you bother to think about what you're seeing. Okay, so now I'd like to bring in the case of Jim, the retail trader. So I want to give a little example here and see if it connects with anybody out there to say, hey, I recognize this person. Okay, so Jim, the retail trader. Jim's a family guy. He's still working during the day, still holding a day job. He's fairly new to investing and trading. He's got his heart in the right place. He's trying to do the right thing here. So Jim's a smart guy. He has all the mechanics down. He knows all of the studies and how to work his charts. When he goes to parties, he impresses everyone around with his knowledge of how the market works and what every study does and how it's displayed and interpreted on the charts. It's not necessarily making any money, though. That's the problem with Jim, the retail trader. So there's a good chance that Jim, the retail trader, has far too many studies on his charts, like most new traders do. This is what a typical new trader's charts look like. So newer traders tend to substitute trailing studies, which are all these ones like the CCI and the stochastics and MACDs and RSI, Wilder, and the market forecast, and we have a moving average envelope, and we have a ribbon study on here, and we've got all kinds of garbage, but basically what we're doing is we're obscuring the most important thing that's on this chart to begin with, which is the price. Okay, so there's a mistaken belief that studies are somehow more authoritative than price itself. And this is what drives us crazy here at TheoTrade, is that people are actually charging you money to provide studies to you, which is doing nothing more than obscuring the actual price action to begin with. We are a little bit more fundamental here. We believe that the real answer here is understanding what the price itself is trying to tell you. No money required to do that. And it's not a trailing study. Price is right on the money. There's no delays in what price is showing you right now. So let's see how Jim, the trader, processes the entries on his chart. Let's say a specific chart. Let's say maybe he's looking at this one on the NASDAQ futures. And let's say he's looking for this stochastic momentum index crossover as kind of an entry signal for what he's looking at. So he gets his first signal early in the day here. He's looking at this and he goes, I don't think I want to enter this one. It just doesn't seem right to me. It just doesn't feel right. So he's going to pass up that one. And even though it turns out later that would have been a good entry, he's going to look at the next one. So he looks at the next entry and he goes, I don't really like this one because it just didn't pull back far enough and it just doesn't feel right. So Jim the trader keeps on looking for the entries and he's like, well, I'm going to remain patient. I'm going to remain patient. And there he gets another signal a little bit later on and he goes, this one just doesn't feel right. And even though he's looking back on the previous entries and saying, man, I would have been up a whole bunch of points by now if I just taken those trades, but this trade entry just doesn't feel right to him. And this goes on as, he keeps looking at entries and none of them feel good until finally, a little bit later in the day, he looks at one and he goes, you know what? This one looks really good. I like this entry a lot. But the problem is waiting until something feels good generally produces very poor results. As you can see, the former trend that he couldn't enter in, the one that didn't feel all that good all the way through here, all of a sudden is going to make him, kind of angry down the road here because he's like, why didn't I enter back here? Why did I pass up 4 good entries on this chart to get into the very top? And this is what retail traders do. This is what retail traders do. So Jim was trading not to lose instead of trading to win. And this is what a lot of retail traders end up doing. You're making decisions with your gut. You're basing it on feel. And guess what? Guys like me are going to take advantage of that. And this is what tonight's presentation is all about. Jim was waiting on certainty and for the price movements to feel good before he entered. Does that sound familiar? Look, we've all done it. I've done it. You've done it. We've all done that. This is part of the paying dues that comes with this business, is that we have to learn to get rid of those feelings when it comes to our entry points. And sometimes it takes years and years and years to get to that point. So the very thing that he was employing to keep him safe and to avoid losses in his trading was working against him. It was working against him. So the more that he tries to protect against losses, the worse that his trading results will be. Does that sound familiar? And you get into this mode and all of a sudden it becomes a vicious cycle because the more that you try to protect against losses, the worse your results will be. The worse your results will be. So Jim will continually get bad results until he fixes this condition. Chances are he may have to trade a lot until he finally figures out what he's doing wrong. It won't come at the very beginning, though. He's going to have to figure this out. So that begs the question. Can we take the other side of the trade from Trader Jim, from the Trader Jims of the world? Well, yes, we can. I know it sounds heartless, but somebody's got to do it. We're going to look for conditions where we can catch those weak hands bailing out of their positions, having waited too long to enter. If you wait too long to enter, number one, and number two, you're trading not to lose instead of trading to win, do you think they're going to stay in a position and take any kind of heat whatsoever? Not on your life. They're going to bail at the first sign of an Imperial cruiser, right? They're going to be out of that position in no time. So let's learn how to play in the side of the smart money and look for conditions where we can spring the trap. That's the trap that we're talking about here, and enjoy a quick move on their behalf. Thank you very much, Trader Jim. So let's see an example or two of this trade trap setup. So here's one that was, what was this, last Friday. Okay, so last Friday, this is on the NASDAQ futures. NASDAQ futures, this is a tick chart, by the way, for those of you who have not seen one before. This is what we're doing, right? So this is a primary downtrend. For those of you that haven't seen one before, we have not seen any primary downtrends in a long time, at least on larger time frame charts. But if you look quickly, intraday, you may actually see a red candle or two. And so this is a primary downtrend on the NASDAQ futures intraday. Lower highs and lower lows. But what starts to happen at the very end here is of the most interest to me. So if you look at this, and I'm going to pull out this pen here and see if I can get this to work. All the way down here, we're making lower highs and lower lows. Lower highs, lower lows, downtrend. This is a lower high as well too. Now everybody on the planet at this point is looking for this to keep on going, right? Once something's in a trend, everybody looks for it to keep doing the same thing. Everybody's going to look for this to keep rolling down. And actually, if you think about this, if you think about the extension of the Trader Jim example here, obviously this was going up, and then all of a sudden it's going down. This is where people are getting trapped from waiting too long to go long here. And then all of a sudden they're getting roasted to the downside. But now at this point, if you're not entering here to the short side, you're late. You're late, okay? So what's going to happen here is at some point, the trend is going to reverse. A higher low is going to be printed and a higher high. Now you actually, believe it or not, have a change in polarity to the upside. This is now changed polarity to the upside. Those that are going short on this thing are already too late. That's what we're going to take advantage of here. Okay, so we have not only a downtrend, but we also have a nice trend line that we can anchor against, which is, as we're going to see here in a minute, very, very useful. So that's kind of the structure behind building a trap. We're going to look for the same things again and again. Now, if I kind of spread this thing out, again, that's our trend line. There is our entry point. So right there, our entry conditions have been met. Believe it or not, it's that simple. It's just you have to know what you're looking for. You have to know what you're looking for. It's not a study. It's not some magic indicator. It's understanding how price moves and what causes this. Now, what I want you to notice here is as the price starts to move down, okay, we're getting nice lower highs and lower lows, okay? Things start to slow down here, and then all of a sudden when we get through the reversal, do you notice how quickly the price squirts to the upside? We get a nice little squeeze there. This is the big benefit of this trade. For those of you that have sat, whether or not you're swing trading, you're sat in a trade for 30 days wondering when you're going to get your profits, or if you're in a day trade, sitting in there for minutes, if not hours, waiting for the thing to move, this is a condition where you normally get very quick movement from this. Why? Because you've got too many people on the wrong side of the trade with too large a position that have absolutely no tolerance for heat, bailing out of this thing, hitting market orders to get out of the trade. And all those collective market orders are what causes the velocity of the move. We're going to go through more examples here in just a minute. Okay, so here's the trade results for that trade. You can see that I was only in for a couple of minutes, and I'm pulling 8 points out of the market. There was, by no means was that the potential was actually much more for that trade. So notice how quickly that you're out of the trade as Trader Jims get squeezed out by the smart money. So what we're trying to teach you here tonight is how to get on the side of the smart money instead of just trading your news and trading your indicators like everybody else is. So there's, again, the smart money, and then there's the not so smart money. The not so smart money will always wait until they have processed way too much information with the hope of taking as much risk out of the trade as possible. What is this normally called in trader speak? This is called confirmation. I'm waiting for confirmation on this trade. I must have confirmation before I enter this trade. Confirmation means you don't believe in what you're doing and you're looking for some kind of other, affirmation to be able to take that trade. You just don't need it. In doing so, you've actually added more risk to the trade. That's not good. So by waiting until the entry conditions felt better, they have essentially sealed their fate in their trade. I see it every day. Everybody goes through this phase. Everybody goes through this phase. You've got to get past that to be part of the smart money. So as far as I know, everybody does this when they first start trading, perhaps for years, until either they figure it out or they don't figure it out. So this contributes to the pervasive sense that the market is out to get me. We've all kind of felt that. Oh man, as soon as I enter, the market just takes a dump and takes me out with it. We've all been through that before. We've all felt that sense of betrayal that the market's out to get you. The smart money has learned to ignore and even fade those desires for certainty. If you don't know what fade means, hang around here. It is looking for these exact conditions in the majority of the other side. So they've already figured this out, and they've already figured out how to get this to work for them. So that leads us to part two. So this is for all you engineers out there. I'm one of you. This is what you're looking for. You're looking for the actual formula for this. You're looking for the details. So here is part two of tonight's presentation. So what signals precede or signal the trap? So before I give you these signals, look, I get it. Some of you are going to be skeptical. You're going to say, but, wait a minute here, not so fast, Doc, not so fast. Is that it? It can't be that. That's it. There has to be some kind of magic study that you've got to attach to this thing. Otherwise, anybody could do this. Yes, it's a fairly simple concept, and it's a fairly simple signal. But the reason why people don't take it is because it doesn't feel good. So a lot of you are going to say, if it's that simple, why isn't everyone trading it? Well, I have a question back for you. Why don't traders buy low and sell high? Because it doesn't feel good. That's why they don't do it. Trading is a very simple act. We complicate things, don't we? So why are the simple things in trading so difficult to execute? It's because of our emotions. I have no fear of this signal being arbitraged or faded. A lot of you are going to say, well, if you're telling us about this, it's going to be faded tomorrow. People are going to log into the market tomorrow and fade every signal that you take. I don't care. Bring it on, because this will always continue to work. As long as they're inexperienced or not so smart money traders in the market, this signal will continue to work. As long as markets move, it has to work. It's like simple physics here, guys. Descending patterns will always break to the upside. Ascending patterns will always break to the downside. It's a law that always has to work, right? This will never go away. So as long as we have movement in the market, this signal will continue to work. So let me give you the three primary rules of the trap trade. And don't forget, you're going to get a replay of this, so you can write them down if you want to, but I think it would probably be more useful for you if you just watch this. If you just watch this and watch the examples that I'm going to give you here. Number one, we want to see an established swing on our anchor chart. So anchor chart means a larger time frame chart that we're kind of piggybacking along on that swing. And a signal chart is what we're actually entering the trade with. We want to see a trend on our signal chart. So the chart that I showed you before with higher or lower highs and lower lows moving down, that's a trend. Lower highs and lower lows is a downtrend. So an uptrend is a series of higher highs and higher lows. A downtrend is a series of lower highs and lower lows. I know that you guys know this. Just want to remind you. Number 2, we want to see a change in polarity occur on our signal chart. A change in polarity means, for those of you that don't know what that term means, if we have a primary downtrend, a change in polarity means that we're going to see this series of lower highs and lower lows change into a higher low, higher high. Now all of a sudden we have a series of higher highs and higher lows. We have a change in polarity to the upside. That's what we're looking for. So just in case you were curious, that's what that is. So a downtrend will start this process usually by printing a higher low and completes the process by printing a higher high. Reverse this for an uptrend changing to a downtrend. This is simple stuff, guys. It's not that hard. People have brainwashed you into using studies instead of processing the price movement. Number 3. Number 3, most trends on the signal chart will function within the bounds of a trend line. What does that mean? That means, let me draw this out for you. A picture is worth at least a dozen words here. If we have this downtrend in place, which you're going to find, and let me get fancy here and change the color. Hang on a second. What you're going to find is that usually stays within the bounds of a trend line. A trend line will normally connect or offer as resistance in this downtrend the upper bounds of each pullback on here. Each pullback generally finds some kind of resistance or terminates right around that trend line. So trend lines are very, very useful for what we're going to use them for here. So downtrends will break the trend line to the upside, and uptrends will break the trend line to the downside. So a downtrend will eventually break that trend line to the upside. So think about this for a minute. It has to occur unless a stock is going to go to 0. A downtrend will always break to the upside. Downtrends will always break to the upside. And conversely, uptrends will always break to the downside. None of this is rocket surgery here, guys. It's all very simple concepts perhaps nobody taught you before. So you now have a signal which is highly likely to squeeze out the not so smart. That's it. That's it. That's the 3 rules. It's that simple. We just need to learn how to take the signals when they come. They're not going to be comfortable for you. That's my job, is to help you through that, though. So we talked about a day trading signal before. Here is a classic one that showed on the S&P at the end of August. So here's the cash market, SPX. Okay, here's that trend line that I talked about, and notice that lovely. Okay, let's see, let's go with a different color here. Let's go back to this. Notice this trend. All of a sudden this trend is moving lower highs, lower lows, lower highs. Uh-oh, we have a higher low here. Warning, we have a higher low. It is not a lower low. It could reverse. It could reverse, and we will know if it reverses, if it blows through this trend line here. Then it becomes a higher high, higher low. We have a reversal right there. We have a change in polarity right there if this does that. This is what I get excited about. So bear with me for a minute here. This is what I do. Okay, so look at that. Look at what happened there. There's the trend line. The price broke above that. We have a lovely signal there. You have a little blue arrow there too. So you guys might recognize this as the pivot array study that we provided to you as well too. You're welcome. Okay, and you can see that this was the beginning of a pretty strong move to the upside, wasn't it? So this descending pattern broke to the upside with a higher low, higher high, nice change in polarity, a reversal. This is all very simple stuff, but it's not some silly study that you have to spend money to do. This is all right in front of you. Nobody ever taught you this before. So here's a good swing trade result from that. So net profit of 115%, nothing to shake your head at. That was a cheap entry for this thing, 11 cents, 11 bucks per contract, and we got 30 bucks per contract out of this thing. Gross net profit after commissions of 115%. This is the type of trade you can take with this. This is a typical vertical debit spread trade using options. So the characteristics of this trade: during the period leading up to that trade, the market was universally bearish or negative. So I'm talking about this specific trade here. So traders begin to feel more comfortable about placing short positions. As it kept on going down near the end of August, it's like, hey, I'm getting more and more comfortable. The market might actually be falling apart now. Let's start to increase our short position size. Normally, this is when you start to place too large a position because of this comfort factor. We all do it. We all do it. We trade based on how we feel. We're human beings. This contributes to the velocity of the short squeeze that follows. What do you mean it's breaking out? This thing's supposed to be going down. This doesn't make sense. Who did this? This must be Janet Yellen. Who are we going to throw darts at this week? Whose fault is it besides our own? So let's see some more examples here about how we can do this. So here's a current swing trade on lows. So lows didn't exactly follow the classic pattern here. If you look at this, so this is actually today's chart. So here's our downtrend, lower highs, lower lows. There we go. Lower highs, lower lows. And now what happens is we break above the trend line, and here's where the higher low is printed. So sometimes you're not going to have necessarily the higher low printed here. Sometimes it's going to do the opposite. Sometimes this thing is going to bust a move off the bottom and eventually print a higher low at a higher spot. But that doesn't mean that it can't still take it. So your entry is either, if you can take a very aggressive entry down here, but the one I'm trying to teach you tonight is as it makes a new high up here. And it's moving and grooving right now. So again, very inexpensive options spread entry at $49 per contract. That represents your total risk on this. We're looking for about 50%. Okay, don't forget, guys, I can't read the questions here, and I won't be able to read them until we finish up today. So write down your questions to yourself, hang in there, and I will get to questions at the very end of today's session. Thank you. Okay, so that's current swing trade on lows. And here I'm going to go back to the day trading because we see this constantly during the market moves. We see this constantly intraday. Okay, downtrend. We see a trend line here. We see a higher low setting up, breaking the trend line. There you go. Also, what we see is a longer term trend line, breaking the trend line, setting in a higher low. Away we go. So here was another trade, and this one was from yesterday. So again, these trades are normally characterized by very short hold times, strong movement in your favor, very strong movement. This is why we're interested in these. So bull and bear traps, you've heard these expressions before. You've heard about the bull trap, you've heard about the bear trap. They usually occur when the majority assume that the markets will move in an agreed upon direction. So they usually do so temporarily, then they collapse in the opposite direction. So what most people have heard from like a bull trap is maybe something that's consolidating and then breaks out and then collapses like this. Or the opposite, where you have something that's about to move to the downside, collapses temporarily, pulls in the shorts, and then gets trapped to the opposite side. Again, this is kind of the same concept that we're looking at here. So being able to anticipate when these could occur is the power of this setup. Again, we're not using a black box. We're not using some kind of magic forecasting tool. In fact, we're not even forecasting at all. All we're saying is, hey, if this happens, if it prints a higher low and breaks to a higher high, then this is what I'm going to do. It's more about telling myself what I'm going to do, regardless of how I feel, than it is about a study. So it's just using simple price action and a willingness to go against the herd. The most powerful tools in trade analysis are right in front of us. It happens to be an analyzing price. So now I'm going to get to the final step here. Next steps, what do you do? Where do you go from here? If you're intrigued, how can you learn about this? How can you apply this thing? So let's do a quick review here. We're looking for an established trend on our signal chart. The signal chart is the chart that we're using to take signals from. We're going to anticipate that at some point we're going to see the polarity interrupted by the print of a higher low during a downtrend or interrupted by a lower high during an uptrend. It's going to come as a surprise to most people that are looking based on feel. We will also see a trend line break if the reversal has legs. So if it's a significant reversal, we're going to break the trend line. Once the polarity has confirmed to change directions, remember we want to see that polarity change, we are getting the very first entry into the new trend direction. You're getting the very first shot. You're not going to get that on any kind of a study. You're not going to get that on any kind of, any kind of custom code or some black box or anything. The not so smart money positions that were recently entered because they waited too long will be exited at great pain. So being the first one on a new trend makes you part of the smart money. So you've always wanted to be part of the smart money. Now's your chance. Your willingness to take an aggressive entry should reward you faster. Okay? So next steps. I just walked you guys through the basic steps of what a trade or a trap trade entry is. You can use this for any strategy that takes advantage of a quick reversal. I'm sure you can think of a few. It really doesn't matter whether you're using stocks or futures or options or anything like that. Even a non-directional trade could be entered at higher probability, like a vertical credit spread if you want to use that, with the trap entry. Some of you have gotten an aha moment tonight. Some of you are like, oh, I get what he's saying. I get it. I understand it. All right, I'm done, right? You know exactly what to do from here. So maybe I'm slow, but again, guys, it took me 15,000 hours of dedicated chart exposure of doing this stuff every single day to finally put this together. I know it sounds ridiculous, but sometimes the simplest, most powerful things are right in front of us and we don't see them. And hopefully I've maybe changed your life in a small way tonight. I don't feel like I'm giving up a secret to you guys because even if most people know about the signal, they're not going to allow themselves to take it. They're going to say, oh yeah, I know I'm supposed to take that signal down there, but it doesn't feel right. I don't care what Doc says. That just doesn't feel good. You're going to have to train yourself to do this, right? So I have absolutely zero fear that me releasing or talking about this signal is going to suddenly cause me to be arbitraged or faded. It's just not going to happen. Okay, so for those of you that see the power of this signal and want to save a few thousand hours of your time to know the exact details of this setup, like, here's the details here, the 3 immutable rules of the trap trade setup, the 4 additional factors that cause stronger reversals. We're always looking for ways to increase our edge. How to train yourself to be part of the smart money move. It's not something you just flick a switch. You have to train yourself to do this. What strategies will you use, whether or not you're trading stocks or options or futures? How to use our pivot array study, which we gave to you guys, to identify important highs and lows to trade against. How to filter these trades with fractal energy trading principles. So that's one of my things here to ensure the very highest probability entries. So there's ways to actually ensure that you can increase the entry effectiveness here. And then again, how to use scanning techniques to have opportunities emailed to you as markets move. You can actually use that pivot array study to scan against it. How to build a whole trading system around the one trade setup. So, of course, to that end, we've built a class for this. So this Saturday, October 7th, at 10 o'clock Eastern, 9 o'clock Central, I will be with you for several hours over 3 hours of live content talking about this exact setup. You'll know exactly what I'm looking for and for what you're supposed to do after spending 3 hours with me. You're going to get the slides, the replay video, the studies, the scans, your question and answer live on that session. We're going to show you how to identify optimum conditions for price movement from the trap. How to increase how to set up your charts to increase your probability of detecting reversals. There's a definite way that you have to do this. How do you train your eye to look for these reversals? How to use thinkorswim to scan for these signals on a real-time basis. You can actually have it do the heavy lifting for you. Live examples we're going to look at, and potential setups for the next week. Of course, we will do that to say, what are we seeing right now? Now, there are a number of bonuses. We always do this for every class that we do. We tend to pack on the bonuses probably too much, right? In addition to the live content, the slides, the pivot array study, the pivot array scans, the examples, Q&A, the archive of the session, plus the ability to watch the archive video as much as you want to, put it on infinite loop if you want, interacting with me for your questions. You're also going to receive the following bonuses for signing up today. Okay, bonus number 1, Fractal Energy Trading Class. This is my baby. This is my baby that I've built over the years. So this is a 5-part video series. So it gives you the video archive and slides, which spans 5 hours, 5 hours of information. So there's a lot that's in here. You'll learn how to read fractal price action. So this is the basis for the trap trade setup. So if you want to get better at reading price, you go through this class. Also, how to interpret energy. Remember, I talked about the fact that markets move between range expansion and range contraction. It's based on energy. Okay, so how do you understand that? How do you apply that to your studies? So myself, I think it's one of the most innovative and accurate technical systems currently on the market. Making price and price action a focus of your analysis instantly puts you a step ahead of most traders that are using lagging signals. If you've ever used a moving average crossover study, you'll know exactly what I'm talking about. Retail value, this sells for 150 bucks on the street. Even that's a bargain. Trap trade bonus number 2 is the study itself for fractal energy. So this study ties in with that program and provides you a way to determine energy on multiple time frames. We don't want to take the trap trade if it's exhausted in that direction. So it's also possible to scan against signals with this study. It's a different scan. The study is not available. It does not come with thinkorswim, but it is available to TheoTrade customers as part of our service. Again, some people are out there selling it for 150 bucks. Don't pay it. Get it through us. Bonus number 3, the pivot array study, which you guys should have. This ties in with the trap trade program, provides you a way to determine price pivots and reversal levels. It's also possible to scan against signals with this study. The study is not available anywhere else. We're treating you guys like TheoTrade customers. You should have this study, right? Retail value on the street, 150 bucks. Bonus number 4, this is one we just decided to do today. Trade with us. Join us on next Monday. Those signing up for the trap trade system will be invited to join our live trading room on Monday, October 9th, all day long. So as long as we're on the air, you can join us. Now, if you say, well, wait a minute, I'm working, I can't do that. You'll have the replay of all the sessions during that day. Those will be available to you for as long as you need them. Listen to several different traders as they post live trades. You're going to see a lot of different styles in there, a lot of different people coming on board, trading things in a different manner and providing their own live narrative on the markets, as well as posting in the chat room that we have. We have a very, very active chat room with everybody interacting with each other. So trades pop up all the time during the day. So guys like Don Kaufman, Jeff Bierman, Tony Rago, myself, posting all day long. Retail value, 97 bucks to become, just a month-long member of Total Theo. You can be one of us for the day. Join us here. So the trap trade, what is the cost of this thing? You're probably asking yourself, what on earth is this going to cost, right? So if you put all this stuff together, Fractal Energy Trading Program, $150. The study, $150. The pivot array study, another $150. Access to a live trading room, $97. That's $547 in bonuses, not including the class itself. So what we're going to do is we're going to include all these bonuses if you sign up for the class today for a one-time total of $97. That is it. And this is where you go, TheoTrade.com/trap. TheoTrade.com/trap. Now what I'd like to do at this point, while you're doing that, is I just want to answer a couple of questions here that I know will come up. And then I will get to your Q&A here in just a minute here. So don't forget that's TheoTrade.com/trap. Is this a trial subscription? Are you going to charge me something else down the road? Is there going to be additional billing? A lot of people do this stuff. They charge you something inexpensive like this, and all of a sudden you get hit with another bill down the road. No, this is a one-time $97 fee. That's it. One-time $97. I don't have options experience or futures experience. Will I be able to follow along in the class? Yes. We're going to be doing a stock example with this. We'll also be doing simple options examples, simple futures examples. These are all very simple ways to catch a directional move. Can I use this with my 401k or IRA? Of course you can. If you can trade a strategy within there, we're just looking for a directional strategy. Even if it's in your 401k, you have to buy a mutual fund or something like that, or take some kind of inverse fund to be able to take a short position. You can certainly use this strategy to improve your entries with that. I work full-time and I can't trade during the day. Can I use this program? Yes, the technique will help you secure better entries, even if you're using limit orders entered after hours to enter positions. Don't forget, that's TheoTrade.com/trap. So look at that website, okay? Get signed up here. A lot of people normally ask around this time, hey, I use Elliott Wave or ADX or MACDs or Stochastics or Bollingers or CCI or Market Forecast or whatever. That's the current system that I use. Will your system help me? Yes. Yes. Any system that uses price action to help improve your decision making is going to help defeat this sort of trailing study effect that you're going to have. You're going to get the first possible entry. You're going to get the first possible entry on this. Okay? Another question that comes up, I don't use thinkorswim. Can this system still help me? Yes, the only functionality that you might miss is some of the automated scanning feature on the daily chart. I teach this material old school, so even if you had nothing else but just an abacus and you had to call up your broker on the phone, as long as you could get access to a chart, you can use this. You can manually identify setups first before you apply automation. Okay? So join us now with a trap trade. Again, it's this weekend, this Saturday, 10 o'clock Eastern, 9 o'clock Central. Don't forget the bonuses that you get. That's $547 in bonuses, not including the class itself. All of this is a one-time fee of $97, TheoTrade.com/trap. If you go out there, you're going to find this site that's over here. You're going to see what's out there. Again, the trap trading system, Visa, MasterCard, American Express, Discover, add to cart. You can even get in through PayPal, I'm sure, right? If you have any questions, you can email support@theotrade.com or a 1-800 number. Once you get you guys in here tonight, you're also available if you want to chat now. You can go in through our chat service, ask us any questions about that. You can go through all the bullet points here. What I want to do is to want you guys to make a decision now, because we're not going to offer all of these bonuses again if we have to do a replay for this. I'm not going to offer these bonuses again. So to get all of this stuff, you have to act tonight. Tonight. Okay, so with that in mind, what I will do is I will switch over to the chat window here and I will answer your questions about the Trap Trade class.